So, today's promise, we are going to reveal how you bridge the gap between your net wealth number and your dream life number. Now, the way that we are going to bridge that gap is one word. So, whatever you think you're capable of in terms of becoming a business owner, building a business, and just hedging your bets on yourself, you get to see if you can beat. Before I talk about I know I promised I would, but I need to address the silent thief in the room. This is called Hello and welcome back to the Millionaires Are Made, the podcast. If you are new around here and you're hopping in fresh, I'm Michelle Rule. I'm the multi-millionaire, soul-led business owner, investor, wife, mum of two, and your hype woman for blending a bulletproof strategy with the quantum level energetics so that wealth flows to you on autopilot. Sounds like a vibe, right? Now, today is part 3 of my 4-part mini series on wealth strategy. And if you've been around here for a minute, you'll know that yes, absolutely, I talk energetics all day long, but I also know that strategy made me incredibly wealthy. And so to ignore the strategy would be like ignoring half of the reason why I even got here. But it's not the full picture. So a quick recap. In episode 5, you discovered your net wealth number. That is our assets minus liabilities. Where are you currently at now? In episode 6 of this mini-series, you locked in your 2 big targets. So your financial freedom number, so what it would cost in terms of what you would need to build of an asset base to replace your current income. So financial freedom. And your dream life number, which is that stretchy, big, beautiful goal that we know that you can achieve once you map it. And crucially, what we saw was the gap between your net wealth, where you currently are, and your dream life or financial freedom number. So today's promise, we are going to reveal how you bridge the gap between your net wealth number and your dream life number. Now, the way that we are going to bridge that gap is one word: assets. Now, I need to get this printed on a t-shirt because every single woman needs to know what an asset is, what the different types of assets are, and how they can help us build wealth. So, assets are not just fancy jargon. They're simple, scalable machines that compound your money 24/7. So even if you're watching Netflix, sleeping, or snorkeling in the Maldives, your wealth will be growing. So pour that cup of coffee and get that headphone set on. However you are listening to this today, just get yourself comfy and get ready to learn all about assets. Okay, now before I talk about assets, I know I promised I would, but I need to address the silent thief in the room. This is called inflation. Now, if you don't know what inflation is, let me break it down to you. So your money, your cash will halve every 15 to 20 years. Yep, cut in half. Cash, gone. Up in smoke. Cash in the bank will lose its value because of this thing called inflation. So what it will purchase you today won't be the same as what it will purchase you tomorrow. So 10 years from now, I'm going to need a whole lot more money to buy the exact same thing. So that, my loves, is inflation. So we really can't ignore inflation because this will break your brain away from thinking I'm going to somehow magically save my way to wealth, because money that we put in the bank account is susceptible to inflation. So storing your cash away will be quietly eroding by the inflation amount every single year. It's sad, sad but true. But hey, you're in the right place to learn all about it and in the right place to do something about it. So while cash seems like fun, really, it's a terrible long-term strategy. It basically erodes day after day, even with your interest savers. So let me explain some more about that. But the inflation, if I could just keep it simple, inflation is the reason why your savings account alone will never bridge the gap between where you are right now and your financial freedom. All right, thanks, inflation. I really appreciate you. So let's talk about what will then. So what's going to beat inflation? So what is going to beat inflation? One word: assets. Now, a super simple definition of assets, an asset is simply something of value. So, like I said before, an asset is something that, let's just say you had to sell it, you could sell it for something, for some value. Now, of course, we have all different types of assets, depreciating and appreciating. So, either an asset that will become more valuable in time or an asset that loses its value in time. But essentially, if we are looking to grow your wealth, we want to make sure that we are picking assets that grow your wealth. Okay, so the type of assets that we would like is something that's going to grow your wealth. So we're looking for something that you can own that will either throw off some type of cash flow, or maybe it climbs in value, or ideally both, right? Without you trading your time for that growth. So if we have a little quick checklist here, asset checklist. All right. So does it appreciate in value or pay some type of cash flow? So does it grow in its value, or does it spit off rental income, dividends, or any growth in a property value? Number two, historical track record. Does it beat inflation? Now, inflation, I didn't tell you before, but it sits at around historically about 2.5%. Let's just say I like to round it to around 3% to make sure that I'm covering myself for inflation. So if I'm buying an asset, I want to make sure that it is an asset that beats inflation, something that will grow in value faster than 3% per annum. Another thing to look at with your assets is leverage ability. So can you leverage your cash to purchase an asset? Liquidity is another thing we look at. So how quickly can you exit? How quickly can you sell this asset? Do you have to sell the whole thing to access the cash? Can you just sell off part of it to access the cash? And number 5 is control. So can you actually influence the performance of it, or is it just a set and forget? So let me just run through those 5 asset selector checklists again. Number 1, does the asset appreciate or pay some type of cash flow? So am I getting something for it essentially? Number 2, I want to know, does it actually beat inflation, that 2.5%? It needs to be growing or providing me cash more than that. Number 3, leverageability. Can I actually leverage my cash in this asset class? So that might help decide what type of asset I want to buy. Liquidity. Number 4 is liquidity. So how quickly can I turn it into liquid cash? How quickly could I sell it if I needed to? Do I have to sell the whole thing? And number 5 is, can you influence the performance of this asset? Or is it just something that you have to buy and deal with whatever the market sends you? All right, you're doing really well here, learning a lot about assets. So stay tuned because I have a whole lot more to say on assets. Let's start to look at some of the core asset classes. Just then, I was showing you the 5 things to look at when we are picking our assets. But now let's look at the different types of assets. All right. So essentially, real estate, property, that's going to be one, right? Now, I love property. Yes, I do. I own 5 investment properties. I love it. I love it for its leverage, but it's not the only thing I do. Now, we're going to dive into property a whole lot more in a sec. So let's just say, first of all, we've got real estate or property. Number 2, asset class would be like shares or EFTs. So basically, you are buying shares in companies. So when you purchase a share, you're purchasing a share in a company. When a company does well, you get access to more value for the share. Number 3 asset class is businesses. So like I say, business is high risk, high return, but I love businesses. I own businesses. I'm constantly thinking of new business ideas because yes, it's high risk, but it's high control. You get to decide what you do with it. Then we have fixed income, and there's some other alternatives. So fixed income assets, things like bonds or peer-to-peer lending, and then alternatives like gold, crypto, maybe art even. Some people invest in art as a resale or a place to store their cash that may then appreciate in value, right? Okay, so there's a whole lot on the different types of asset classes. So why don't I just dive in a little deeper, because I know you don't want the surface level info. You want some more info on each of these. So let's firstly just break down real estate, property. It's no secret that I love it. Why do I love it? Well, let's just say, for example, that we've got an example here where let's just say the bank will sell you a $600,000 property and it only wants 120K as a deposit, a cash deposit. So that's a 5-to-1 leverage. So a 20% deposit. So let's just say that property earns a 7% increase over the year. So let's just say at the end of that year, that $600,000 property is now worth $642,000 or an extra 42K in equity. Now, remember, my initial investment was just my cash deposit. So here I have 120K of my cash that was able to purchase an asset of 600,000. So if we look at what I put in, which is 120 cash, and what I've got out, which is $42,000, you're looking at a 35% return on my cash. So not a bad asset to own. And that doesn't even take into account any, you might have some other tax perks, depreciation expenses, things that we can chat to your accountant about. But essentially, property, yes, it does about a 7%, 8%, other years much better, other years less than that. But what I'm looking at with property is I'm thinking about the leverage. So how much cash I have to put in to hold the asset and how much I get in return. Now, if we look at the second class here, so we're looking at shares. Now, love it too. I have them too. I think we should have a mix of all of the assets. I don't think we should just be pigeonholing ourselves into one type. Okay, so let's talk shares or buying stocks, or a share essentially is a share in a business, in a company. Now, look, you'll probably get about a 9 or a 10% return on the investment. So slightly higher than property. Amazing. So look, it's a smart way to invest your money, to have your money grow. So if we're looking at inflation, we're trying to beat that 2.5% inflation, and we're looking at shares that will give us 9 or 10% return. Well, yes, our cash is growing. Our cash is put in the market to grow versus sitting in a bank account and eroding at that 2.5% inflation rate. So shares are amazing. And now we have the third asset class. So let's talk about business for a bit. Now, businesses, yes, it's high risk, high return, I like to say. Now, if you have to bet on anyone and you want to bet on yourself, start a business. And again, I think we should have a mix of all of these things. So wouldn't it be great to own property, own shares, and own businesses? Because whilst you have the predictability of, let's say, the stock market and the property market, even though it has its dips and its ebbs and its flows, like I get it, but we're looking long term. In a long term view, they all technically will grow faster than inflation. But then businesses, now with business, your potential is exponential. So whatever you think you're capable of in terms of becoming a business owner, building a business, and just hedging your bets on yourself, you get to see if you can beat that 2.5% growth. So what could you put into a business, either purchasing a business or starting a business, that would beat inflation? So a business can be a really exciting place to grow your wealth. But again, it is high risk. So the chance of having a sale of the business or some type of exit payout may not be there. So I wouldn't be putting all your money into building it and not thinking long-term wealth strategy as well. So you've got your bonds. Okay, so that's really like putting your cash somewhere and saying, I'm going to leave it there for 10 years and you get a fixed amount return. It'll beat inflation. It'll do better than that. But the alternatives like crypto, reselling of art, the chances are you're going to do quite well, but we don't exactly know what's going to happen in the future. So it's sort of like going to the casino and having a go, having a bet. Now, listen, people have done extremely well from crypto. And so we're not going to rule anything out. And as investors, I feel like we need to look at all of the options, but it's certainly worth having a go, right? Okay. So let's just sum that up so that you can start to get an idea as a investor, what sorts of things you might like to invest in. So again, if we look at it like you might want to keep some cash. I like to keep 3 to 6 months living costs, probably a bit more, to be honest. I keep buffers in my property accounts. So you want to have some cash on hand, but cash is not a wealth strategy. Cash is just something that we need as a buffer and to fuel our life, right? So anything in excess of that, I would certainly be wanting to get into the market so that it's growing faster than it's being eaten away by inflation. So if we look at another bucket so we've got our cash, and then we might want to put some things into growth. So some type of a growth asset. So property, stocks, shares, something that is going to grow in value. You might also consider what type of income comes off of the asset. Maybe you want high yield rental properties. Have structured my portfolio around growth. So that's really what I'm interested is in the growth of the property, not in the rental yield. But all of these things we consider when we're purchasing your assets. And of course, it's always a bit of fun to have a bit of speculative spice in there, a bit of crypto. Why not invest in a startup, some collectibles? Yes, it's a bit of fun, like going to the casino, but hey, people do very well and you can't win it if you're not in it. So listen, you could 5 times, 10x, 20x, 50x your money, or it could flame out. So when I'm looking at that sort of investing, I always look at it with a bit of fun and I don't put anything in that I'm not happy to lose. So let's start to sum it all up because there's been a huge amount of information today in only 20 minutes. And I'm so proud of you all for hanging in there and getting access to this. So essentially, if we are looking at assets, here are some pitfalls that we want to steer clear of. Paralysis by analysis. You've heard me talk about this before. This is where you analyzing and micro analyzing all of the data and you just don't know which way to move. And so you just never start. We want to make sure you start, right? So pick something that you can get into. And if you don't yet know and you haven't yet had a meeting, so we're going to need a financial planner, we're going to need an accountant, a broker, you're going to need your financial team to help you decide. But in the meantime, why not open up a bank account, call it invest, and just start funneling cash off every single week so that you start to get in the process of I'm getting ready to invest, and I'm going to build a financial team around me. This is exactly what I do with my clients. I don't give financial advice. I don't need to. I'm here as a wealth expander to open your mind to the possibilities that are for you and to help empower you as a woman to build a financial team around you so that you've got every single person in your team that you need to start investing. And whilst we're doing all of that, then we're doing the deep dive energetics work because the strategy in a way, although it sounds tricky, it's really not. The main thing is that you're doing something and that you're investing in assets and that you're mapping it. Where are you now? Where do you need to go? And how are you going to get there? So what you choose to pick, and that's the discussion you'll have with your planner, is completely up to you. But analysis by paralysis, don't get stuck doing nothing because you are overanalyzing all of your different options. I would say pick a range of assets. Have your growth assets, have your high cash assets, have your speculative ones in there too. Why not? Have a bit of everything. So if you can take anything away from this episode, let me just give you this. Number one, there is this thing called inflation and it will eat your cash away. It'll eat the value of your cash. So now we know there's this thing called inflation. It's about at 2.5% and we need to get money into something other than cash. So that is going to be assets. Now, what type of asset you pick, they're going to all perform differently. I mean, why not pick a range of them? But you're going to be working with your financial team to come up with a plan that works for you. And so that you can go into investing feeling empowered, like you're ready to go and you know what you're going to invest in. So assets is absolutely the way to financial freedom. And then if I could say the third thing for today is start. So start unready, start messy. When we started, we didn't have much, but you just start. You start and you learn as you go. So if you haven't yet started investing, then just open up a bank account. Let's start an automatic transfer every single week and find your team so that once you get to that meeting, you know, I can invest X amount of dollars every single week. And that will become the beginning of your investing journey. All right. That's about it for assets today. Now, listen, chasing bigger salaries, do it. If it lights up your soul, amazing. But remember that assets are the machines that make money while you sleep. Calculate it, commit to it, and watch it compound. Okay, so millionaires aren't born, millionaires are made. And decamillionaires, listen, I've said it before that that's where I believe every single woman has the right to be, and you can become a self-made multimillionaire. So chart your net wealth. Let's get an asset accumulation plan together and stay tuned for the next episode. And I'm going to dive more into why I love property and what my property portfolio looks like. Thanks for listening. See you next time.